What is the data really saying? Welcome to ChartWatch, where we break down a few key charts and explain the story the data is telling about the economy and long-term investment trends.
Hi, everyone. Tom Siomades, Chief Market Economist here at AE Wealth Management, and I want to go over a few charts from our monthly chart packet, and I think some of the more useful charts that you could look at to discuss where things are these days with clients. First things, let's look at the Treasury yield curve. Treasury yield curves, and I've been talking about this for a little while now, have been slightly elevated and have been climbing, which is kind of counterintuitive to what we're seeing out there, because typically when the market takes a dive, rates usually decline because people run to the safety of bonds. This being an energy-driven thing, with all the stuff that we've talked about with respect to the stuff that's going on in the Strait of Hormuz and in the constraints on the oil market and the fact that things are going up, at the pump, are all sort of driving these fears that we see of shorter-term inflation. The other part of the curve is elevated as well, because what you have there is people coming to the realization that, hey, we've borrowed a bunch of money. We're pushing $40 trillion in debt. And, people are a little bit, I would say concerned, as you should be. I mean, last week I saw it was the first time that our debt passed our annual GDP, which is crazy. So it's no surprise there that people are looking for a bit of a higher rate on the long end as well. So short end of the rate, again, to just cover it really quickly, short end of the rate being driven by inflationary fears because of the oil situation, which hopefully is resolved soon. And the longer end is elevated slightly because people now are starting to, kind of worry about our national debt, because in light of the fact that we haven't seen the kind of growth. Okay, so that's one thing to focus on. The other thing I want to focus on is, listen, a lot of stuff has gone on. I'm not gonna sit here and sugarcoat that March was ugly, but again, if you're following a plan and you're allocated properly, look at the difference that we had between our March returns and last month. And last month was a crazy month. I mean, it was the best month we've had in probably since 2020. Over 10% on the S&P for a swing. But again, this is one of the pitfalls that, people get into as they start watching myopically what's going on a day-to-day basis with the markets. And remember, there's not always news, but there's always something to watch, and that can masquerade as news. So if you are one of these folks that's concerned, yeah, get in there and talk to clients about their planning and about how solid their plan is and why they should stick with it. And if they're still squirrely after that, sit down and talk to them and say, hey, maybe we need to renew a plan. But at the end of the day, this market was crazy one month and then crazy in a good way the next month. But it still talks to the power of being able to ride these markets out, have a long-term plan, have a segmented and organized approach to how you look at, parts of your portfolio, not just what the S&P or the Dow is doing on a daily basis. So I hope that helps. And again, listen, I don't think things are going to get any quieter from here. There'll just be something else we'll have to react to. But I think it's important. This was a perfect example to put stuff in perspective for people. This isn't like a lost decade. This was literally 2 weeks. The market craters, and then literally 2 weeks later, it's back up again as if none of this ever happened. So be mindful of that. It's a conversation point. I'm not saying belittle it. I think it's important because people's feelings and their state of mind and how they approach investments is super important as well. But at the same time, you can't ignore reality. And this is what happens more and more these days, where you have these downdrafts and market come back. That doesn't mean that markets won't go down someday and stay there, but that has not been the case. And again, just be mindful of the fact that you should have a plan and you should stick with it and not give in to these short-term fears. Hope that helps. Have a great day.